In this video, we will explain the reason why the market moves like it does at key economical reports. Have you ever wondered why the market acts in such a volatile manner at exactly the key economical reports when it hits? Many people will say, it was a bullish or bearish sentiment of the news, but this is not the correct way of seeing this thing. So, first of all, what moves the market? Aggression does, okay? If everyone was staying in the market on a limit order on the book right here, the market would simply not move if everyone was on a limit order. These are the passive orders, as you can see here, that are related on the DOM right here, and this is our custom-made heat map, as you can see here. So we can see prior to the interest rates at 2 p.m., you can see how the market fades right here. The limit order starts to decrease. You can see this on the limit orders, on the pulling and stacking right here on the DOM, and you can see how the orders building here are far less of what it was around here, right? Like you had 100 per tick, and now you can see how they start to decrease as the time moves on. And look what happens exactly when the market hits, okay? You can see how the orders decrease to even 10 per tick from 100. So you get this initial swing to the upside. More often than not, you will have two swings, one swing in one direction and then an equal swing the other way. Most people thought right here that, oh my god, this is bullish, I'm just going to enter. But if you roll back and backtest this thing, all right, like you just go back to key economical reports, you will likely see a swing to the upside and then an equal swing the other way. And what we want to see here is where the market is building new liquidity. And as you can see here, look where it happens, okay? We can see the strong market participants starting to build their orders on the previous high and the VWAP. We can see this in real time, okay? So after this fading, you can see here again the market still hasn't found the right footing. We can see the book is thin, and then after the news, after the fact, you can see how it starts to build up. Traders removed their orders from the book, creating a thin book, so you have this initial swing to the upside and then the market tanks back down. So you can have two swings, okay? One swing to the upside, and then we are looking for the second swing for a potential long opportunity. And as you can see here, where are we going to look for good support? We will look for good support where we see other market participants building strong limit orders. As you can see here, this area right here has almost 200 per tick. Limit orders sitting ready to get filled, and then we are looking for a potential long opportunity at the previous high and the VWAP. Stacking confluence is key as always, and you can see this in real time that we have the overlapping VWAP and the previous high creating a pivot of interest. Then you can see this initial swing, so we are waiting to see what happens once the market hits this point of interest. Again, the market moved initially because the order book was too thin. It's much like running through a forest. When you have a lot of trees in front of you, it's harder, but when you have less, you can just move freely. So any aggression at the time of the release, right here, move the market aggressively to the upside. So again, we are looking for this initial swing to the upside and then moving towards the downside. So let's see how the market reacts once it grabs this liquidity right here. Again, bulls try to find continuation, but the market hasn't found any upside continuation until we hit this key liquidity zone, meaning strong long participant basically try to long the market. So this is very key. We know here are small traders, they get filled for smaller orders, and then the market still moves to the downside. And this was a very key opportunity right here to enter long for a safer opportunity, for example, than entering here. You have to ask what's the risk reward, okay? It's not about exclusively winning the trade. It's about how much exposure you have here. Since we know we are expecting an equal swing to the downside, so where is the safest entry that we can potentially find could be this zone right here. So utilizing our Sierra suite, this is just two of the charts. We have 12 charts included in the suite. We can stack some confluences in order to find high probability trades. In the suite, you will find an introduction to market profiles, order flow, and market dynamics of market action theory. Thanks for watching, and we will see you on the next one.